Hi, welcome to the Market Alert for Friday, the 16th of January 2015. And just before we get started, I would like to take this opportunity of welcoming all of those that are new to the Pinpoint Trader trading strategy. And you join us at interesting times, actually, in the Dow since the beginning of January. The market's been quite volatile. And what we're looking at here on the chart before we get into yesterday's afternoon session from 2:30 to 9 p.m. is the pre-market. And yesterday, as you will see from this chart, the market was trading quite quietly. Then all of a sudden we had this massive drop of 238 points in the Dow, and this is before it had even opened. And the reason for this is that the Swiss bank decided to drop the cap value that it has on the Swiss franc. It was completely unknown, unpredicted, and just came out of the blue. But fortunately for us, it came in the pre-market session. So if you're wondering what this big drop in the market was, then that is exactly what it was. It was the Swiss central bank there taking the cap off the Swiss franc. So the market managed to pull back, which you can see there before the pre-market session. As we go into the white part of the chart there, that's the 230 onwards. But still very volatile pre-market. You can see how the market came back to where it actually sold off there, so returning 200 plus points in the pre-market session. So already there's a clue, there's a lot of volatility around, and we see the first bar there again well in excess of 60, 70 points. And this continues all the way through until we find some support down here at the 17,350 level. But again, these price bars are too long from the low to the high. The range of these bars is too wide to produce any signals. And for the last week, we have also had the trade markup change from the default setting of 20 to 25 just to take account of this volatility, just to give us some trades that are still a good, decent or half decent risk reward and the chance to get in the markets. It's like I've always said, I'd rather have no trade than a losing trade or consecutive losing trades. So here we're just playing around a bit with the volatility, adjusting slightly to take account of the current state of the market which we have at the moment. And just to show you, for example, if there was a trade on this first bar, let's say it had been highlighted, you can see there that the risk is 113 points. Well, that's not the sort of risk that the strategy is about. What we're looking for is around 20 points or less. So because of the range of these bars and the volatility at the moment, we are seeing fewer trades, but in my opinion, that's what the software is designed to do, is to give you trades where the risk reward is in your favor and there's less volatility, so that means there's less chance of actually being stopped out of the trade as well. So we can see this volatility. The market starts to calm down sort of early evening, and this is at 10 past 8. This is about the latest you want to consider getting into the trade, and this one went on to make the 20-point scalp there. The market reversed, and then at 10 to 9, 2050, you can see there the market putting in a second signal, which also went down to the scalp target, but of course was a bit too late. So the first trade trading down there and eventually hitting the scalp. So once again we see a bit of a volatile day, and prices following have continued to move down on the overnight, and now just trying to find some support and work the way back up. But at least we're getting smaller price bars, so the volatility's dropped off on the overnight, which is what we want to see. In the daily chart, again, you can see this lot of volatility. We had the buying pressure on Wednesday, expecting an up move yesterday, and then of course the announcement from the Swiss bank put the kibosh on that one, and we saw the market move lower. And on the overnight, you can see prices have traded down to the 17,200 level there and have come off these. Of course, we've got, let me just get rid of this and do this, just narrow these price bars a bit. If we have a look at the the low of December, early December there, you can see that we're looking around the 17,000 level for support in this market. A break below this will see the market continue lower, as we have got over here all the way back to the last major correction we had in October, where we traded down to, we just have a look here, 15,849, so 15,850 there for the October low. So there's a lot to the downside on this market. We could do with a bit of a rally to the upside. We could do with the volatility just dropping slightly as well, just to give us better risk-reward trade as well. You can see the market coming back here to the 76% that we drew in earlier in the week from here to here, and that's where the market's currently traded, 17,292 there. On the news front, let's see what we've got after 2:30 this afternoon. We've got 2:55 prelim UOM consumer sentiment. This is out, as we say, 2:55, and it's forecast to be 94.2, previous 93. So if it comes out, the actual comes out as forecast, it shouldn't be too bad. And then at 4 p.m. we've got an FOMC member, Williams speaks, but that's classed as a medium impact news item there. On the implied volatility front, let's just have a quick look. This increased yesterday to 17.45. I'm looking for this to go to around the 24% level to find a true bottom in this market. So we've got a bit to go yet. So if the volatility continues, we can use this to gauge where the market's next market bottom is likely to be. And just before concluding, if you are new to PPT, and I know there's a few of you out there, if you're wondering what the implied volatility is all about, if you go to the member section of the website to additional training videos and then scroll down, you will find a whole host of additional training videos there, and along with that you will find one about the implied volatility and what it actually is and how we've used this very successfully in picking the market tops and bottoms of late. Right, that's it for today, and as ever, thank you for your support, very much appreciated. All things being equal, I shall see you in Monday's edition. Have a great weekend, and as ever, thanks for watching. I shall see you in the next one.